Hey everyone. So pretty interesting day in the market, right? Market was up. Is it going to last? I have my doubts. I would think we might get some kind of a reversal. And why is that? Well, the market is extremely over. Actually, let me rephrase that. Parts of the market are extremely overbought. The S&P, which is what we're looking at here, SPY, is the S&P 500 ETF. There's 500 stocks in it. And every one of those stocks is in one of 11 different sectors. Now, different times, different things are in control of the market. Different sectors are in the driver's seat. So here's what I'm seeing. Money's flowing into tech, and that's it. I mean, that's it. The other sectors don't look so good. And tech is so overbought. Now, what does overbought mean? Well, historically, or the vast majority of the time, or most of the time, something trades within what would be its usual or its typical trading range. When something gets above that, we call that overbought. Now, why is that important? Well, when markets are overbought, that draws sellers into the market because they are going to be expecting a reversal or a reversion to the mean. So here's our S&P 500. This I have on here a breakout, right? When something gets above resistance and stays there, we call it a breakout. Resistance is a large group of investors who are trying to sell at or around the same price. In this case, obviously, it's 416. Now, when a market's moving higher, there's not enough supply or sell orders to fill all the demand or buy orders. So the buyers are forced to pay higher prices. When we get to a resistance level, all of a sudden things change. There is enough supply to fill all the demand. Now, some of the investors who want to sell around the resistance level start to think to themselves, gee, the market's not moving higher anymore. The price has stopped going up. Why did that happen? Well, maybe there are other sellers entering the market. And that's the reason. So these sellers get nervous and they start to undercut each other. They don't want to miss out. And they if you don't have the lowest price, the buyers will just go to someone else. So a lot of times when we get to resistance levels, we get these quick sell-offs like we had here, like we had here. When something gets above resistance, it isn't just symbolic. It tells us that the investors who created that resistance with their sell orders are out of the market. They've either finished their orders, maybe they cancel their orders. But anytime you take supply or sellers out of a market, it sets the stage for the demand or the buyers to have to pay higher prices if they want to get their orders done. Now, the S&P is a huge thing, benchmark, whatever you want to call it. It's worth probably trillions of dollars. It's going to take a few days to see whether this holds or not. Now, I have my suspicions, and I would not be surprised to see a reversal. And let me explain why. This is the technology sector, and it's extremely overbought. This red line here is what we call a Bollinger Band. It's two standard deviations above the 20-day moving average. Now, why is this important? Well, according to statistics, at least what they tell me, I am not a statistician. According to statistics, 95% of trading should be within two standard deviations of the mean. Now, the Bollinger Band, as a default, uses the 20-day moving average. You could always change that. People don't realize you can change the defaults. But whatever, this is going to illustrate my point. The last time we were as overbought as we are now, in other words, more than two standard deviations above the average or the mean, was back here. And guess what happened? A big sell off followed. So this money is just getting put into technology. People are buying it at any price. It's overbought. When that runs out, when there's the buyers are done, there's no one left to push the market higher, and the only way it can go is lower. There's an old saying on Wall Street: the rising tide lifts all boats. And for a rally to be sustained, all the sectors kind of got to be going the same way, with the exception of, I would say, energy. Energy could be going down, but energy is a very small part of the market. But in general, when it's a healthy market, it goes up slow, and we get tech going up, we get financials going up, we get industrials going up. Remember, there's 11 sectors, and this is one of them, XLK. So it's extremely overbought. The last time we were this overbought, we had a reversal. This chart illustrates a couple interesting points. Notice how resistance here became support here. Well, this happens because resistance here became support here. Resistance became support. How could resistance turn into support? Well, what is support? It's the opposite of resistance. It's a level where there's a large amount of investors who want to pay at or around the same price for shares. Now, when resistance turns into support, okay, it's a common thing. You can see it on a lot of charts. You have to look at a chart through the prism of what does it tell us about supply and demand and what does it tell us about investor psychology. That's why so many technical analysts just suck. They don't know what the hell they're doing. They look at these patterns, they don't understand them. They're like, oh, this is this pattern, this is that pattern. It's not important to remember the patterns, okay? What's important to understand is what does this tell us about psychology and supply and demand? Why would there be resistance at a former resistance level? Well, there were investors who bought here who thought they made a mistake when the price went lower. They tell themselves, I'm going to buy my shares back. I'm sorry, let me say it again. They tell themselves, I'm going to sell my shares if I can get out at break even. So we have these remorseful buyers placing their sell order at the level that was a peak. So a lot of times when we get to a former peak, we have resistance because we have remorseful buyers trying to get out. Here we have resistance becoming support, resistance becoming support, resistance becoming support. This is because of seller's remorse. People sell and the price goes higher. A lot of these investors tell themselves, I made a mistake. I want to buy my shares back, but I'm only going to do so if I get them for the same price that I sold them at. So if you have enough remorseful sellers placing buy orders, resistance can become support. So the reason why some price levels are more important than others has nothing to do with the debt ceiling or China or this, that, or the other thing they're talking about on the financial media that you're looking at. It is because of investor psychology. 98% of the moves in the market, I'm speculating, I don't have statistical proof, but as someone who's traded in the institutional trading world for more than 2 decades, I'm confident saying that the vast majority of moves happen because of psychology. Resistance because of support because of psychology. Resistance can remain resistance because of psychology. Now, here is the communication services sector, all right? Remember, there's 11 sectors. This is very overbought, and it looks like maybe it's breaking out. Communication services is actually the home of Google and Facebook. People say Google and Facebook are tech stocks. Well, whatever, man. I guess technically they kind of are. Like technically, maybe they're tech stocks, but according to the S&P, they live in the communication services sector. So this sector is moving higher too. So we got tech moving higher and we got communication services moving higher. And guess what? That's pretty much it. Now, this is why I think communication services might reverse. Google is about 25% of that sector. I don't know how many stocks are in the sector, probably 30, 40, 50, but they're based on market cap. Now, Google is 25% of the sector, and it is extremely overbought. As a matter of fact, the last time it was this overbought was right before the COVID crash. Now, back here, I was expecting a sell off. I mean, I didn't know COVID was coming along, but the market was way overbought. But anyway, this is the most overbought this stock has been in 3 years. And it's at resistance. When something gets to resistance, remember, there's a lot of sellers. When something is overbought, that draws sellers into the market. You get this kind of double whammy of sellers around. There's sellers kind of hanging out. Now, if this reverses, it's going to bring that sector lower. Now let's go check this out. This is the healthcare sector. This is the second biggest sector in the market. It's been in a complete meltdown. They don't talk about this on the financial media, but the second biggest sector in the market is melting down. All the boats are not being lifted by the same tide, right? We got tech is up big, but it's extremely overbought. So that's going to draw sellers in. We got healthcare is in a complete meltdown. This is a descending triangle pattern. And these are bearish, and this one really kind of played out perfectly. This is telling us that we have aggressive sellers and complacent buyers. The buyers are okay with hanging out at the support level. They're kind of like, yeah, whatever, man. Stock comes to me, I buy it. Or if the shares come to me, I buy them. If not, whatever. As time goes by, we get this line, okay, these are what we call lower highs. Markets go in peaks and valleys. So here's a peak. This peak formed at a lower price level than this one. This peak formed at a lower price level than this one. What does this illustrate? When you look at a chart pattern, you have to understand you are looking at least if you're doing it right, you're looking at a graphical illustration of investor psychology. Most technical analysts don't know what they're doing and they don't understand this. Anyway, we got the second biggest sector in the market is in a meltdown. And there's a lot of charts that look like this in the healthcare sector. I just wanted to bring up Pfizer. I mean, Pfizer is in a complete meltdown. A lot of the other stocks, Thermo Scientific, TMO, a bunch of the other stocks are just looking really weak, really in a meltdown. So let me just sum up saying I think we're going to see some kind of a reversal. I probably would be okay with some profit taking here if you're a SPY trader. Again, the part of the market that's been driving it higher is very, very, very overbought. That's going to bring sellers in, and there's a good chance that they knock it down. The rest of the market outside of tech is either neutral or looks really bad. And this is the second biggest sector. Well, Pfizer is part of it. And this is going lower. So remember what I said, the rising tide lifts all boats. If only one or two boats are going up and the other boats are going down, the tide is not rising. All right, well, anyway, check us out. Please make sure you come back and please subscribe to my channel here. I go over SPY every day. And that's it, everybody. Hope to see you soon. Thanks a lot.